Good afternoon, all. Camelback Trading 2724 and the pitfuturestrading.com coming to you this Friday afternoon, January 24th. Looking at the last 5 or 6 days in the market profile of the SPY ETF. A lot to talk about for a day that started so promising for the bulls, ends up, for the most part, pretty disastrous as we end with an outside day down. We have 4 sets of single prints that held. We had 6 at one point. That's the most I've ever seen in a day. The most it's ever held in a day that I've seen since I've been doing this is 5. We have 4 that hold. Very good volume today. Right now I'm at 80 million with the after hours to come. So we're going to be doing around 90 million today. Our average has been 55 million. For myself, I had a horrible day because I made a very, very poor trade, and I'll explain what I did and why I did it. So let's go over what transpired today. So first off, we gapped higher. Came down. Didn't fill the gap the first time I got long. Took it back up. Nice trade. Second time, came down, filled the gap, but basically held yesterday's price pro, went back up a bit, got out. So I had 2 nice trades to start the day. What I didn't realize, or I certainly failed to realize, when A closed and B opened, B went up a tick, I believe, and that was it. So for all these times, for these past months, we're looking for lowest accepted price in B, and I say that's a really good guide. That means we're not going to go any lower. Well, highest accepted price, which we haven't had forever because we've been doing nothing but going up, this was perfect today. We opened up in B, ticked up 1, and that was it. So shame on me, number 1, for failing to realize that. Okay. Then we came down. I did nothing in B. I did nothing in C. D period opened. As soon as D took out C's high, I got long. I was looking to fill the singles and to test yesterday's high. Wasn't looking for a new high. So that's what I was looking for when we just absolutely reversed and flushed out. That's not the trade I'm upset about. I would do that trade 10 out of 10 times. We stopped the one-time framing down. At the time, value was overlapping to higher, and I was looking to fill the singles, test yesterday's high and get out, and then possibly even short it if we couldn't go any higher. But we absolutely reversed and flushed out. That's fine. That's something I would continue to do. I then took a short trade in E. It was a very good short. Took it for good size, but I didn't hold it for long. As it came down, took it off at the POC, because in my head, with value still overlapping to higher, and because so many times we've seen days where we come down and come right back into balance, my head wasn't focused on the short, which it should have been. So it was a nice trade. I got back half of what I lost on that trade in D, but I should have held it. But then here's the trade that really screwed me up. So we continued to go down, right? We took out yesterday's low in F, but then G balanced and H opened. And I thought at that time, now I'm going to preface this by saying I was looking for an afternoon rally high to short it. But I've said this in the past now, well, instead of just waiting for the afternoon rally high, why don't I get long to get it to the afternoon rally high, make money on that, and then see it reverse? So when H opened and we were above yesterday's low, I took a call position. Now that's not, again, yes, I was fading a trend day. I was definitely fading the trend day at that point, not because I thought the market was okay, but I was looking for that afternoon rally high. And I'm not justifying what I did is right, that's for sure. However, when H came down, got below yesterday's low, and then got below G's low, that's when I should have been out of the trade. Instead, I added down here, and then watch it flush out, and that's when I got out, and that cost me tremendously. So very, very poor trade management on my part on that one. And then we finally balanced in K. K stopped the one-time framing down. We got the afternoon rally high in L, and then M flushed down again. And I didn't do any other trades. So I had made, the sad thing was 2 winners in a loser in D, a winner in E. So I was 3-1 in trades until this one, which wiped out everything and more. So I made 5 trades on the day. I made money on 3 of them and lost a lot. So, again, I say don't fade a trend day, and I really wasn't. Hopefully that explanation tells you why I was long here. Again, I'm not saying it was the right trade, but the worst part of it was not getting out once we got below yesterday's low, and certainly G's low. Should never have added, which I did. Okay, so let's go over destinations for Monday, and then we'll look at the charts because things are changing. So the one good thing is we did have a price spike when Jay took out eyes low, but we closed above it. So there's no price spike to worry about, and we couldn't get a price probe to the downside. So they don't have that. What we do have is an afternoon rally high of L's high at 329.96. Then we have 4 sets of single prints. Okay, and they're fairly small, 2 of them, at least 2 of them. First one starts at 329.91 and gets filled at 94 cents, only 3 cents. Second one starts at 329.97, gets filled at 330.37. Third one starts at 330.81, gets filled at 83, so that one's only 2 cents. And the fourth one starts at 331.56, gets filled at 75. So 3 out of the 4 are fairly small, especially 2 of them. Then we have our HAP, our highest accepted price. B's high, which is 332.23. And then we have today's high of 332.53 and the all-time high and weekly high of 332.95. Now for our downside, we have today's low of 327.36, which is a weekly low. Then we have a daily low right below that of 327.26. Daily low of 326.84. Single prints 326.75 to 72 from January 13th. 325.92 weekly low. 325.20 daily low. And I'll stop there. And below there, there's a vacuum. So we have our next destination's $3 lower from there. So let's go to the charts. Okay, monthly. There's still a week to go in the month, but right now it's still very healthy. One time framing up for 2 months, not including this month, and the gap, which is still in force. So the monthly, the longest term, is healthy. Weekly. Also one time framing up 3 weeks. The difference with the weekly is we're firmly inside last week's range, but more importantly, we bounced off the low pretty good. We bounced off the low by about almost $1.50. So the question is, are we going to be able to break or at least test this trend line and take out last week's low to stop the one-time framing up? So far, they have not. So right now, the long-term and intermediate term are healthy. Daily. Bounced off this trend line pretty nicely today from back in October, right? We got there 1, 2, 3. This is the 4th time. This time it bounced off it. I'm calling the daily down. It's an outside day down, which is pretty bearish, right? We took out the previous day's high, closed below the previous day's low. So something has definitely changed, at least in the shorter term, in the daily. Now, after a day like today, you do get some consolidation, generally. If the market is not that weak, we should not take out today's low that quickly on Monday. If the sellers aren't done, well, then we could certainly take it out and then start another trend to the downside. Volume good leads me to believe it was more than just your typical algos running this. Remember, we're at the all-time highs. So we're getting late in January. A lot of times new money comes in early, and then February is the time where you start to sell off a bit. So maybe some people are starting to take some money off the table at the all-time highs. We're down 1% for the week. That's it. Not even, I think. Last week the SPY closed at $331.95. We close at $328. We'll round it out to 95. We're down $3. So it's barely 1% that we're down on the week. That's nothing. The only thing that was different today is the trend day down acted like it should. So what do I mean by that? Well, we've had plenty of days where we've gone lower, had single prints, and then you just have that V-shaped recovery. You never got it today. You never got it today. You got the afternoon rally high, which is very prevalent on a trend day down, and then you had M, which opened, never got close to taking out L's high, and then almost tested the day's low. So this is how a trend day down in the past has acted. But we haven't had any of those at all, really, in this past year and a half. At all. So I think it surprised a lot of people today. And I think it's a nuance that people should not take lightly. We had excess possibly, at least short term, at the all-time high. So yesterday, I was kind of looking, what happened today is what I was looking for yesterday when we gapped lower and I thought we were going to get something. But no, we had that, there we go, V-shaped recovery and boom, price probe, and all to the upside. Mindless machines just taking it up there. They continued this morning on the gap, and then that was it. So I hope you guys survived today and did better than I did. Have a great weekend, and we'll speak prior to the opening on Monday.